Hi, this is the Become Rich Project, day number 19, diary entry number 8. Today I'd like to cover some analysis on news and a little bit of research. In today's trade, I'll be going through the status of my purchased shares and exploring some ComSec features and my take on having successful investments. I'm feeling a bit lazy, so I really want to get this done as quickly as possible. Let's have a quick look at some news. Okay, the economy may be struggling, but the federal budget might already be back in the black. That's good to hear from a public funds perspective. BOC, Bendigo and Adelaide Bank sued over unfair contracts. Okay, well, I'm not going to be investing in them. Whatevs. Economy set for weakest growth in nearly 20 years. ASX to drop, Wall Street sinks as US-China tariffs impact manufacturers. Let's have a look at those. They seem pretty interesting. So this is telling us what's been happening, not necessarily helping us forecast, but okay. Australian economy set for weakest GDP growth in nearly 20 years. That's good to know. Note to self, this is why we don't invest in mutual funds and grouped things, because overall this is a collection of every companies in Australia, right? So it doesn't necessarily mean that every company will have weak growth. So it's about choosing the correct company. Another reason why to invest in stocks in the US. ASX drops as US-China trade war hits manufacturers. We're not investing in manufacturers right now, so not applicable, but good to know. The Australian dollar has rebounded. Okay. Delayed reaction to US-China tariffs. We're already aware of that. Right, so lesson for the day is, despite what's in the news, we're mostly only concerned about the companies we've actually got shares in or would like to purchase shares in. So research should be concentrated on those companies specifically. The news, there is also a bit of clickbait, just to watch out for those. They have alternative intentions. Let's log into ComSec. Let's have a look at our portfolio. Oh, it's a bit low. Why is that? 0 TLS shares. I'm gonna cancel the buy order so that this reflects the true nature of our current portfolio. Manage orders. TLS. Cancel. Cancelled. Now going back to portfolio. That's better. Ooh, look at that. So pretty. Okay, we can see some losses here, but I'm not a day trader. The purpose of purchasing these shares Telstra is for the long term, and Midway Limited is for the dividends. I like this feature. Portfolio health checks. Broker recommendations represent the consensus view of a panel of analysts as compiled by Morningstar. That's good to know. We're in the green. Share section diversification. Diversification of your share portfolio by industry sector. Materials. Going back to summary, we can see here that our account only has $489.95 left. Having a look at our purchases, Telstra was purchased for $510.05, hence why the account is only showing $489.95 from our $1,000 initial capital. Now, there's a bit of a problem. We purchased Midway Limited shares, and the settlement date for those shares to be bought is on 5th of September, which is tomorrow. So we need to have the account to 652.24. So I need to transfer some money to reach that. So let's do that now. Logging into my NetBank. I've transferred $200 into the business account because we need to be funding CDIA via the business account for accounting purposes. Side note, my battery is low. That's better. Let's transfer some money. What the next? That's better. Okay. So that means to purchase $652.24 of Midway Limited shares will be covered by the CDIA account. Let's change that to 1,200. Keep track of it all. Let's take a look at Telstra Corporation for today. So, in addition to summary, we have announcements, which is where we can get some information about the company. Great. Oh, we already know about the NBN Corp plan and the impact on Telstra, but it's good to know that we can get this information readily available on CommSec. Charts, dividends we're already quite aware of. Recommendations, Goldman Sachs is still saying target price should be $4.20. It tells us what the company is about. Forecasts and trends. If we scroll down, we can see the forecast for this financial year and next financial year. We can see a lot of positive surprise in earnings announcement and forecast. Trade history, if we really want to have a look at a day-to-day type of trading, but we're not about day-to-day trading. I don't do day trading. Financials, derivatives. Let's go to chart. Since this is what most people are familiar with, let's stick to the price chart. We can change the year. 1 year is good. We can see that the Telstra shares has gone down in value or perceived value. A bit of advice, and what I often tell myself is never to look at share price of the company invested in on a daily, hourly, regularly basis. That's just asking for trouble. Midway shares, the buy order I placed was originally $2.80. Now, because of impulses, I decided to purchase the shares straight away. So my temperament wasn't there. I was acting on impulse and bought it at $2.88. If only I had trusted my own intuition and research, I would have stayed with a buy order for $2.80, not looking at the share price on a very regular basis, and it would have purchased at $2.80 instead of $2.88. I did that on purpose to show that when purchasing shares and investing in companies, once you've done the research and you have a perceived current value of the company and that the company is undervalued and you want to purchase a part of that company for a particular price, stick to it. Success in investing, in my opinion, is very much largely dependent on temperament. Patience is a key to this. So, Telstra, it's currently trading at $3.57, and we bought those shares for a little higher than that, but our forecast has been that it will reach $3.90, if not $4, if not Goldman Sachs' $4.20. We are settling between $3.90 and $4. We might not reach that in the next couple of weeks, but it will increase to that value unless something off field suddenly comes around the corner and changes that. The reason why Telstra company value is currently decreasing is because of the NBN Corporation plan. Now, what does that mean? It means that the profit that they forecasted has decreased by 400 million. So obviously, the value and therefore share of Telstra will decrease for the interim, but those are forecasts. I can't imagine how many times I've forecasted my group of projects for the next 3 months and I was wrong. Despite how much research and planning that comes into these things, forecasts are forecasts. We don't know what the future holds. However, we can predict with good accuracy that Telstra will be around for the next year. If not the next 5 years, if not the next 10 years, if not for a very long time. So, our investment is considered safe. We know we will eventually profit from the company, whether it's via dividend payout, whether it's increasing the value of our shares. But eventually we will profit. Midway, however, and let's take a look at them now. Midway Limited. I purchased shares in this company at $2.88. It's decreased by 10 cents since then, and that was only a couple of days ago. Now, the reason why I'm not worried is because I bought Midway shares specifically for the dividend payouts. So, comes tomorrow, the shares I bought will be eligible for dividends. I also purchased Midway shares for the very reason that it is a smaller company. It's not a multi-million-dollar company. The value of this company is not even $500,000. So it's a small company in comparison. Purchasing these types of shares from these smaller companies is riskier. I don't know if they're gonna be around for the next 5 years, but I can do my research to have confidence that they'll be around for the next year. Now, it is common knowledge that during ex-dividend date, the value of the company will decrease. The reason why I purchase shares for this company is because my confidence of their ability to increase the value of the company from my research. Now that we've spent the 1,000 initial capital investment, then there's really not much we can do right now except wait and see. Let's have a look at the portfolio. Check on a daily basis if you'd like. Use your phone. There is an app. It's so easy to check if you're worried about anything or you want to research other companies. Technically, no more money in the portfolio to purchase new shares. The only work that we can do right now is maybe spend 15 to half an hour a day researching on the next big investment. But we've already got that lined up. I've got it lined up as IOOFF Holdings, making sure that I purchase those shares before the ex-dividend date of 12 September 2019. It's 4th of September. That's a week from now. So there's really not much work until then. So, being the lazy me, I'm just gonna watch Netflix and enjoy life until next time. Referring back to the goals for today, I've done a bit of analysis on news and research, checked on the status of purchased shares, and explored ComSec features. A little bit of advice in successful investments. Can't think of anything else. Thanks for watching. Bye.